Fintech Chatter, brought to you by Tier 1 People, leaders in Fintech executive search. Welcome to Fintech Chatter, the show where Fintech leaders join me for a chat. I'm your host, Dexter Cousins, and today's guest is Daniel Foggo from Plenti. Daniel is CEO and co-founder of ASX-listed Plenti, a fintech lender providing faster, fairer loans through smart technology. Plenti offer award-winning automotive, renewable energy, and personal loans delivered by proprietary technology. Since founding Plenti in 2014, loan originations have grown consistently, supported by diversified loan products, distribution channels, and funding, and underpinned by exceptional credit performance and continual innovation. Plenti listed on the ASX in September 2020, and I chat to Daniel about the Plenti business, Daniel's role in shaping the Australian fintech industry we have today. I'm going to start that bit again. Plenti listed on the ASX in September 2020, and I chat to Daniel about the Plenti business, Daniel's role in shaping the Australian fintech industry that we have today, and what the future holds for fintech as we head into uncertain economic times. Daniel, welcome to the show.
Thank you, Dexter. It's a pleasure to speak again.
It is a pleasure, and I must apologize because I think about 5 years ago when I started my blog, you were maybe the second or third person that I got onto that. And I started the podcast 3 years ago, and I think I've done about 200 and odd interviews now, and it's taken me this long to get you on.
We're finally here for a chat, so that's all good.
Having said that, I could not think of a better guest to have on at the moment that we find ourselves at right now. I'm taken back to when you and I actually did first do that blog. And we talked a lot about the GFC and the financial crisis and how that was a catalyst or a kind of embryonic moment for Plenti. And there are many things about that interview that I remember that I think are very, very relevant to the times that we find ourselves in, particularly for founders. So I'm really looking forward to this chat. But before we go into all of that, would you mind sharing with our viewers and our listeners a bit about Plenti and what you do?
Sure. I do look forward to covering, subjects such as a bank run because it is fascinating and these are fascinating times. I mean, you provided a very comprehensive introduction to Plenti. I think one thing I'll add, because it does give a little bit of context to the discussion that we'll go into, is a reasonably unique component of what we do is that, some of our loan book, and we've got a loan book of about $1.7 billion, is actually funded by direct investment by retail and sophisticated investors. So what you might say is that provides diversity to the financial system and provides an alternative to the banking system when you have investors investing in loans directly rather than going through the banking system. We've had about 25,000 retail investors sign up to our platform. They've funded over $1 billion in loans. So it's becoming quite material in terms of what we do.
There are some, I guess, key pivotal kind of historical moments, that I potentially wouldn't have a business if it wasn't the journey that you went on, which we'll talk about a bit later. But let's talk a little bit more about the Plenti business because it is fantastic, the story that you've got. Could you maybe tell us just a little bit about kind of where you are now to give us some context in terms of size and the amount of loans, et cetera, that you write?
Sure. So, we're getting to scale now. We've got a team of around 200 based in Sydney predominantly, and also we have an operations centre in Adelaide. As I mentioned earlier, we've got a loan portfolio of around $1.7 billion, and that's been growing very consistently. On a run rate basis, in our last quarterly release, we released the ASX, shows our revenue is about $150 million. We're cash impact positive, importantly. And we still see ourselves as having a vast opportunity in front of us. We operate in a very large market, in round terms, about $150 billion of consumer loans outstanding, which is the space we play in. So when we look at our market share, it's still relatively modest, and we see a long way for us to go in terms of growth. We're still at the foothills of the opportunity, you might say, Despite the fact, actually, we launched our business 8.5 years ago. We funded our first loan in September 2014.
Wow. Now, obviously, there's been a massive shift over this last 18 months for any lending business. There's been some real headwinds and challenges. How's the Plenti business kind of navigated those headwinds? Specifically, I'm talking about, the rapid rise of interest rates.
Sure. Actually, I think we've navigated reasonably well, all things considered. When we've built the business, we've always had risk in mind. And so we've always sought to, do things in a very deliberate and considered fashion, and particularly making sure we get things right, like making sure, obviously, you get the credit right in a lending business. You build the right technology so the right customers want to use you. But importantly, we also sought to make sure we built really diverse funding. So we have seen other businesses at different times, lending businesses at different times, have challenges around their funding. But I think our strategy of making sure we've got diverse funding, including the retail funding component I mentioned earlier, strong bank support, a lot of mezzanine finance providers as well, has actually meant that, we've continued to have strong funding support over the last 18 months.
Yeah.
And because we've got a differentiated product in each of the verticals we operate in, being auto, renewable energy, and personal lending, we have actually been able to protect the margins that we make as a business reasonably well. So overall, I've been really pleased with the performance.
One of the other really cool things about Plenti is, not only being a kind of OG of Aussie fintech, but the proprietary technology. See so many businesses purporting to be a fintech that basically have a website that goes into a call center that's kind of, and you can imagine the hamster on the wheel in the background kind of making the thing all work. But the model that you went with, which at the time was the peer-to-peer lending model, there was no technology around to facilitate that model. So how have you gone about building the tech that's the engine to support Plenti?
Look, I think that's, it's fantastic that you've noted that there's a differentiating factor there. It's really hard from the outside to understand when people talk about technology, what they really mean, what they've built, what they've brought in from the outside. And I think for some businesses that do call themselves fintech, a lot of their technology is not proprietary, and there's a time and stage where that might make sense. I think we've taken a long-term view in terms of technology, which is, the view is that, if we own our own technology, we've got greater flexibility, we can innovate more, we can move faster. And I think there's points in times where you think, well, maybe that wasn't the right decision. But I think once you get to scale, you can definitely see the benefits of having your own technology platform. And really, that has meant investment over the years. So, I mentioned earlier, we've got about 200 staff, around 50 of those are focused on product and technology. And if we look at a lot of the sort of other lending businesses in Australia and even globally, as a proportion of our workforce, obviously that's very high.
Yeah.
If we look at our P&L, it's a reasonably material amount of investment. But I think once you get to the sort of scale we're at now, it drives operational leverage in what you're doing. It brings efficiency in what you're doing, as well as hopefully building a much better customer experience. So that investment pays off.
Yeah. It's fascinating that you mentioned that because, we have seen some real successes. I think, Judo springs to mind as a business that's leveraged technology, but has a high proportion and always intended high proportion of its workforce to be salespeople out there with customers. What have you found has been, the kind of challenge around getting the right talent and the right product people, the right technology people, when the reality is that you're kind of building something that maybe nobody's built before, right? And I like to use the analogy of Elon Musk isn't putting an ad up asking for people who've gone to Mars before to come and join his mission, right? Nobody's done it. How have you gone about actually finding the right people to make sure that you're building the right platform and the right technology?
That's an interesting question. I don't know if I've been asked that before. I think, and thinking on the spot, if you like, I think a large part of it is, the fact that my two co-founders had a really good understanding of technology, set us up pretty well from that standpoint. Firstly, to make sure we brought the right technology people on board. And I think we've done a great job of fostering that talent and keeping those early joiners on board and having really low attrition in our technology area. Last year, the attrition in our technology team was, less than 5%.
Wow.
Whereas we understand the industry was, over 20%.
Yeah, it was. It was, I think, closer to 30, to be honest. Yeah. How have you gone about keeping people then? Because that's a real challenge in itself.
It is. And I think, importantly, obviously, you want people working on something that they believe in, and they believe in the purpose of your business. And so, we genuinely think in our business that we are helping people, and we talk about helping people bring their big ideas to life, whether that's buying, their first car, whether it's putting solar panels on their roof to save money or help the environment, or, some other meaningful, thing you want to get done in life. We're helping people achieve those things. From a technology standpoint specifically, I think the fact we own our own technology, we deploy, new innovations and things that, really raise the bar, almost on a daily basis. About 5 times a day, we're making a new deployment, actually.
Wow.
I think that keeps it interesting for people who are working in technology. Yeah. So they feel like they are making a difference, and they're working on things that are quickly in the hands of customers. And so I think, you're creating an environment where, people feel they're having an impact, and it certainly helps job satisfaction.
Yeah. As I pointed out earlier as well, there aren't many places that actually are building proprietary technology. So there aren't many opportunities to actually do that if that's what you want to do, right?
That's right. And look, I think we're also, if I look back over time, typically every year we launch about 2 new products or offerings, in the last 12 months, that would include, an integration with Tesla, for example. Yeah. It would be the launch of a commercial automotive loan. Today we've launched a new platform we might come to talk to shortly. So when you're doing new things, I think it keeps life interesting.
Yeah, look, that's great, actually, because my next question was going to be, what are some of the cool things that you're working on this year?
Well, actually, it's a good day to ask that. Today, we've launched a new platform, and I'm probably speaking slightly out of school here, but we started focusing on funding solar panels and batteries for households in 2016. And we've built a sizable business there. We work with over 1,000 installer firms, and we also work with some of the big end of town sort of energy retailers. We launched today a platform we called Green Connect, which really serves up to installers of home solar and batteries, a really integrated offering between energy retailers, equipment providers and installers, be that solar and battery, and then virtual power plant networks. We bring all of that together in one place for merchants of these packages, and then we allow the consumer to pay the cost of the packages over 10 years. And so, for most people, the thought of putting solar and batteries into the home is, it's a complicated process. You don't know where to look. You don't know if you're getting a good deal. We're now creating a marketplace where it's very clear what sort of deal you're getting. And we're also bundling in some really good discounts and offerings from some of our partners. So that's quite exciting.
Yeah, absolutely. And look, with the rise in the cost of energy, I've seen my own experiences. You're very much offsetting the cost of the repayments through the energy bills and the reduction in the energy bills now.
You are, and solar's a no-brainer. Solar and battery is a pretty good idea. Yeah. Solar and battery with an electric vehicle is an extremely good idea for people. So I think we've hit that tipping point where many more Australian households will be installing batteries. So
if only we could get our hands on an electric vehicle, eh? Well, that's fantastic. Look, one of the other things I thought is really struck me about the when I first did that interview with you, Daniel, and it's great actually have you now almost 10 years on from the start of the business and writing that first loan. There was something that you said to me at the time, and it stuck with me, for the last 5 years. And it was that you were building. You said something along the lines of, "We're building an enduring business," and the things that we have to do are to focus on profit, keep costs down, have very, very tight credit risk management, and like the fundamentals. That's what we're focused on. That's what we're doing, and kind of one step at a time. 10% improvement every year. These were just things that was, really blew me away, because not only at that time, but I think for the next 3 years, everybody was, would have been telling you, I'm sure, you've got to go and scale, go and hire 500 people, go and raise loads of capital. And so you kind of resisted that and very much had this kind of methodical, patient approach to growing the business. And I think at the time you might have been around about 60, 70 people. So even in that scale, right, you've kind of tripled in size, whereas many others at that time, would have 10x'd their staff numbers. My first question for you is, how tempted were you to throw that plan out of the window when there was so much money flying around that you could have easily gone and done what everybody else did?
Another great question. So, do you know what? I don't think we've ever had too many challenges in our thinking. And that when we launched the business, we always thought about building it in 5 and 10 year increments. Yeah. We had a pretty clear view on what we wanted to build and how we wanted to build it and what sort of timeframes we were working towards. So, yes, there's been times, obviously, over recent years when there has been a lot of money flowing and one could have been much more aggressive around what you're building. But I think we always had a pretty clear plan. And it's not to say that we haven't been pretty aggressive around growth at different times. In the last 12 months, our loan book's grown, around 50% year on year. There was a stage there where it was over 100%. But we sort of did that without getting too far in front of our skis, if you know what I mean. Operationally, I think we've always made sure we've got the capabilities before we take on the growth. But I think when you are a reasonably material shareholder in the business, it does actually change your risk tolerance levels as well. So we've always had a relatively low tolerance for risk, despite being innovative and entrepreneurial. I worked through, the financial crisis. I was in London when that happened. I've seen credit go bad in different businesses over time, as when I had an investment banking career. And we've always wanted to make sure that we're pretty disciplined around what we do. Yeah. When we launched the business, we were regulated by ASIC from day one. There was a real process to go through to get our licenses. We were managing retail investor money from day one, and we took that responsibility very seriously. And so, I think that just embeds in your culture something where, people aren't just, running after the sort of exciting thing at the time. We had opportunities, to move into BNPL in a true sense and do different things over time. But we've always very much decided to stick to our knitting and get it right. Yeah.
Now you're doing my job for me, because my next question was going to be, could we go back to the days when you were starting Plenti, and coming out of that period of the GFC and what you'd witnessed? And I guess, look, first of all, where did you get the idea for Plenti? At the time, I think it was Ratesetter when we connected. And then that whole process that you just talked about with ASIC, because my understanding was, there wasn't a license at the time when you looked to launch the business.
That's right. Well, look, I was working at Barclays Capital in Australia. I think there was a particular moment where I was sitting on a global credit committee called to try and get a loan over the line to a corporate. There were significant fees involved for that corporate. The rate was reasonably high. I was contrasting it against the money they were earning on their deposit. I was looking at the inefficiencies of the meeting I was in, and I started to think, well, look, there must be a better way. And, there's a lot of technology which is streamlining a lot of processes. So I resigned from my job, went to the UK for 3 months, packed up the family, went over there, determined to find a model that I thought was a lending-focused model that was working in the UK that I could go and start in Australia. Again, slightly de-risking if you are, not inventing something from scratch, but you're seeing it work in another market. And through that journey, I met lots of different businesses. And I almost surprised myself when I actually met Ratesetter, which was a consumer lending business and a marketplace lending business. And, my background wasn't retail investment banking, but I met the two founders there. They were telling me what they were doing. They were a very small business at the time, and it really resonated with me. I studied economics. I really believe in an efficient economy. I think finance should be a lubricant, not a friction in the system. And the personal loan market in particular at that time, it was generally slow and cumbersome to get a personal loan. They were really expensive relative to the risk that you represented as a customer. And they had really solved that sort of problem in the UK. interestingly, one of the main founder of that business had worked at Betfair, which was a real peer-to-peer type model. And he was also a Lazard banker, and he was had brought the two together in a sort of model, and we were speaking the same language. And so after having met a lot of different businesses in the UK, I thought that one looks fantastic. This team seems fantastic. I'm going to go and explore the Australian market. And I had a similar conversation with a few other businesses, but decided I wanted to partner with Ratesetter to launch over here. So they took a minority stake in return for a bit of technology and IP. But in a large part, I wanted to partner with them rather than build something from scratch, because I knew in Australia, getting a license to operate would be challenging. Fintech was not a word that was known in 2012. Innovation was not something really talked about in financial services. And so my instinct was, and having spoken to a few lawyers, was that it was going to be really challenging to get a license to operate a business where you took money from mum and dad investors and funded loans, even though, from an economic and a financial system structure perspective, that could make a lot of sense. And actually you should be able to deliver, strong, stable returns to those investors. It was something novel. It was really about fitting a square peg into a round hole. And evidently that was the experience. It took nearly, a couple of years to go through a process with ASIC to really get them up the curve on what fintech was and how, the model that we were proposing could make a lot of sense for both borrowers and investors. So
when you look today where we are, if I'd have gone back about 12 months ago, we'd have been talking about what maybe it's an $80 billion valued industry here in Oz, something around, if not more. But when you kind of look at the ecosystem that we have now, there must be like 400 or 500 different fintechs. There was yourselves, and there were a couple of others around at the time, but we probably didn't call them fintechs as well. Like, what do you often think? Wow, like what have I started here?
Well, I think it was going to start without us, but I think we certainly paved the way a little bit to make life a little bit easier. For people, particularly from a regulatory perspective, I think.
Yeah, and it's been really interesting to see that kind of evolve. To talk about the situation that we're in now. I've had a lot of people reach out who've asked, are we going to see bank runs in Australia? And I think we've got a really well run, regulatory system. I think APRA does a very good job. They do sometimes get some criticism around innovation, and we've seen some of the neobanks, for example, fail. But they've not been catastrophic. They've been managed, well from a failure perspective. What's your kind of view, I guess, as to where we're at now in this economic cycle? And, should we be worrying like GFC style, or do you think what we've seen happen over this last 5-6 days is something that's easily contained?
Well, I certainly think in the US, with the Fed standing behind depositors, that it's pretty contained in the US. Yeah. I think maybe people will start asking questions as to whether there are banks in other markets that have got a similar sort of situation where, you've got a lot of large corporate depositors who can move their money around reasonably quickly. And if they do, the bank needs to sell assets to satisfy, paying those depositors their funds. And if they're sitting on mark-to-market losses, then that's clearly problematic. Yeah. I feel reasonably confident that, at least in the US, things will be fine. And we've seen the determination from the Fed to make sure that they're fine. So it's really other markets that I think one might have more concern about. I think you're absolutely right. We're in a very sound financial system in Australia. Obviously, the regulation is really strong from both APRA, ASIC, and other regulators. And so I'm not particularly concerned about what life looks like here. And in many ways, through this sort of, inflationary environment we're in now, I do feel like this truly is the lucky country. Yeah. We've obviously got, less of a feed into wage inflation, which is very helpful from a rates perspective. We continue to have pretty good tax take given what is being dug out of the ground. Yeah. So it feels like, as a lending business, we're very alive to credit risk. We're very alive to inflation. But actually, I think, we're always cautious, but I think actually, we're expecting that, things will play out okay from here.
And on the other side of that, have you seen, has there been like an increase in interest on the actual kind of, investor side, and, mum and dad investors kind of putting some of their cash into, now that interest rates are rising, some fairly attractive returns, I would imagine?
Well, that's interesting. So we don't set the rates for our investors on our platform. It's really supply and demand driven. Now, I think it's fair to say that people are earning 6.5% up to 7% in funding loans in our plus market. Now, if those rates of return are a bit higher, I think we'd see a lot more money coming on the platform. So we've got a lot of loyal investors who continue to invest their money. As I mentioned earlier, we've funded over $1 billion of loans. Everyone's got every amount of interest and principal due to them. We've got what we call our provision fund sitting there with about $15 million of capital to protect investors from late payments and defaults. And that loan book now is actually, it's around $200 million. Yeah. So it's a reasonable amount of first loss, if you like. Yeah. We did launch at the back end of last year a new market called our notes market, where the return's at 9.2%. And we've had over 700 people apply to participate in that market. So we've actually seen pretty strong demand in terms of people interested in a slightly more sophisticated product, but with higher returns. Yeah. So now if the interest rates keep going up a little bit from here, I think we'll really see some growth come through in that retail platform.
Yeah. I guess as you're sitting here now and you're looking back over this last 10-year journey, I guess, I recently, just last week, I think, or the week before, celebrated 7 years of my business. And I found a little black book that I started on day one, and I read it and I was quite embarrassed, right? And I thought, geez, if I could go back in time, I would be telling this guy not to bother, right? I did not have a clue, but unfortunately at the time I thought I knew everything, right? Are there times where you kind of look at where you are now and look at those days where you were at ASIC, you didn't even know if you were going to get a license for this, and kind of think, wow. And if you could go back to Daniel 2012, what would you be saying to him?
I probably wouldn't say too much. I'd probably let him make his own decision. He was probably pretty determined, and he was probably only going to do what he's done. But I think your point's right. As you go through a journey of building any business, you've got to make sure you're open to learning and that you've got pretty fluid thinking. And I think that's one of the things you really do learn when you're building a business. But we've really enjoyed the journey of building this business. I mentioned, we've had real consistency in our team. The two co-founders I started working with in 2013 are still on board in the business, and we really enjoy working together. And so, no, there's not too much I'd change, and there's not too much advice I'd give to one's younger self.
Yeah. What's been the highlight for you so far in this journey?
It's a tough one. I think probably one of the most enjoyable moments was when we funded our first loan. And I think that was probably symptomatic of the strain and stress and money that had been put into getting through a regulatory process over a couple of years, where, you're paying a lot with lawyers and you don't have an income and you're losing a lot of hair all at once. Yeah. So that was a fantastic moment. Strangely, I think another great moment was actually when we funded a loan on a Saturday. And I was thinking, wow, the technology worked. No one in the office and it still worked. Wow. And then I think the milestones are more, when we hit $1 billion loan portfolio, I think that's the moment when, you cast a lot of, you gain great confidence that you are building a sustainable business and hopefully a legacy that you can be really proud of, you and your team can be really proud of. And hopefully we'll be building a loan portfolio of many billion more over time.
Did launching on the ASX feel like one of those moments, or was it more realization that, right, this is now real serious and I've got all these other obligations to meet?
Well, you don't realize a lot of those obligations until you're actually underway as a listed company. There's usually much more about excitement at the time. Look, we were pretty disappointed on the day we listed that actually we had a few funds set out and our share price went down when you had a dream that actually it was going to go up a lot because you felt undervalued. But actually being a listed company has been a fantastic experience. And I think, it brings many benefits. I think financial services are a bit out of favor at the moment, but I think actually what you need to do as a financial services business, if you are listed, prove yourself through a cycle and prove yourself through challenging times.
Yeah.
And from an investor perspective, that's what they perceive at the moment. So in many ways, it's a good time to be listed.
Yeah.
You don't just want to turn up, when everything's rosy. If you prove yourself now, then, you get rewarded on the far side.
There's probably a lot of people listening to this, maybe founders, maybe not, but who haven't been through a cycle before. What advice would you have, particularly to founders around, that are doing it tough right now, as to, what perhaps they can be doing to get through this period? I just had this conversation the other day, right? It's like, I put my own success not down to talent, but just being the last one standing, right? It's like, I'm not going anywhere, and having that kind of resilience to just stick through this. What would be your advice to people as we go through this cycle?
Oh, look, that's a hard one. I guess it depends on the situation, but I think, you've got to take the lessons out of it that, you've got to be prepared for situations that get more challenging, and they can get a lot more challenging than they are now, obviously. But I think importantly, lean on people who've seen it before and done it before. You're not alone or are going through it at the same time. There are people you can lean on who help you make the right decisions to navigate through effectively. And if you do that, then, it's well worth the exercise, because this won't be the last time that things get challenging for, early stage or fintech businesses over time. They'll come about again and again. So you want to learn as much as you can.
So we've seen over this last decade, and you kind of, paving the way for what was a meteoric rise. And then it feels the last 12 months, and it has in the last 12 months taken a bit of a dip. What do you see as the future for fintech in Australia, and kind of what's your view of, where we go from here?
I think it's actually quite an exciting time, because we are getting some fintechs that are really coming to scale now. And, we can use the term fintech a little bit loosely here, I guess. When you mentioned Afterpay earlier, sorry, we haven't mentioned Afterpay. Afterpay is a great example of something that was built very quickly, and, it's very exciting. But actually, there's a lot of other businesses that are continuing to grow and in their areas are really succeeding. And, you mentioned Judo, sorry. Judo is a really good example. They delivered a really good profit outcome the other day. They continue to grow strongly. Prosper listed on the ASX a number of years ago, continues to grow strongly. And we'd like to think in consumer lending, we're in the example where, we've got the largest consumer lending fintech loan portfolio, and that continues to grow. And so over the next few years, I think we're going to move from being fintechs or disruptors to being mainstream. And I think that's, in many ways, quite exciting.
Yeah. Now I'll go back to that blog interview that we did, and you talked about building this enduring business. I think another reason why it resonated with me, Daniel, is that a lot of what I've seen and heard and watched founders do, they've been given advice that, perhaps it's coming from, what has happened in the UK or what's happened in the US, and they try to apply it in the Aussie market, and it just doesn't work, whether because you haven't got access to the talent or the scale or the capital or the customers or whatever it might be. And I think it's one of the reasons why, your story is one that I think is a real great blueprint of, how you get success in Australia. You have to take like decades long view about, and I think there's been so many people who've been short-sighted around, let's build an app, and flog it for a couple of $1 billion in 2 years, and it's just very, very rare that happens. When you kind of look at the challenges that you faced in making Plenti the business that it is today, what would be your kind of guidance to anybody who's out there who, look, there are a lot of people who I think kind of at these moments start to build the next wave of startups because they've either been made redundant or, they think, hey, this is a really good opportunity now. The market's kind of, crashed. Now it's time to rebuild. If you're kind of giving guidance to people out there who are thinking about going and starting their next thing, what would be the things that you would be suggesting they should look at?
Well, you mean in terms of industry space?
Well, I guess, one, problems to be solved, and then two, what's the way to get it off the ground?
Sure. Look, I think there's always opportunities, and I think there are still massive profit pools and, across banking and incumbents in other areas of finance. And I think that there's always opportunities to take market share in those areas and build fantastic businesses. I think there's probably as great opportunity in each area across finance as there's ever been. And you're absolutely right. These are the times when a lot of the best businesses are actually created. So if you have a belief you can get something going, then you should be pursuing it irrespective of what the broader market's like. But I think the first thing is really diligence the idea and make sure the idea really works, because you often do see a lot of people start on something where the idea is not quite right.
Yeah.
But I think generally the counter to that is if you've got the right people and the right team that come together, they will eventually evolve the idea into something that does work. So, if you've got the right people, you've got the right idea, and you think you can raise the capital to get you where you need to get to, because let's face it, that's challenging at the best of times and probably going to be a bit more difficult over the next couple of years. Then, keep planning on getting going.
Fantastic. Well, Daniel, it's been really great to chat with you about the continued success of Plenti. Look, just amazing to see this journey kind of unfold. And, remember when Ratesetter first hit the scene, and it was actually a catalyst for me to go, okay, now I've got to start thinking about seriously what this space potentially could be. I kind of still remember fondly those early days of 2014, right? And yes, the kind of excitement that I was feeling and nobody else was kind of seeing it. So it's fantastic to kind of, be able to share this kind of origin story with all of the listeners. If anybody's interested, because we get some seriously amazing talent here listening to the show, if anybody's interested around careers at Plenti, what's the best way for them to find out?
They should just make contact with me, daniel.foggo@plenti.com.au. Always keen to speak to people. And I have to say congratulations to you, Dexter, on building your business and being such a strong supporter of the fintech community. Hopefully you're going to be a guest on your own podcast at some stage to tell your story.
Yeah, I was actually on somebody else's podcast a couple of weeks back, and I have to say it was really nice to be asked the questions for a change and not worry about all these knobs and things that I've got going on in the background and lighting and stuff like that. So yeah, it's I hope I take myself up on that offer. It's fine. Well, Daniel, thank you very much. Look, wishing you and the team continued success, and great to speak with you again.
You too. Thanks a lot, Dexter.
Right. And you can connect with me on LinkedIn and Twitter. If you're listening, make sure to give us a follow and a review. And if you're watching us on YouTube, a like and a subscribe. If you're coming back, thanks so much for your support. And until the next episode, keep safe. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you find world-class fintech leadership talent to build world-class fintech ventures. And you can find out more at tier1people.com.